everyone, Zach Paikoff here, and welcome back to another lesson video. Today, I will be going over the 1-3 text. So let's jump right into the video. Okay, so as I had stated before, I am going to be going over the 1-3 text, and this is the last lesson in Chapter 1. That's right, believe it or not, we have reached the end of Chapter 1. So after I record this video and upload it as well, along with recording and uploading the 1-3 work together, we will be officially done with Chapter 1, and we'll be moving on to Chapter 2 very soon. But anyway, today I will be going over the 1-3 text, where we will be learning about how transactions change owner's equity in an accounting equation. And in this first part, we will be learning about revenue transactions. So I'm going to be going over just a few key terms before we go over the accounting part for this lesson. So revenue is an increase in owner's equity resulting from the operation of a business. A sale on account is a sale for which cash will be received at a later date. Alright, so now I'll be going over the transactions. So transaction number 6 reads, on August 12th, received cash from sales, $295. Okay, so we know now that when we receive cash, that means that our cash account is going up or increasing. So we add $295 to the cash side. But also notice that we add $295 to the owner's capital side because we are on opposite sides of the accounting equation. So whatever we do on one side of the accounting equation, we have to do on the other. Otherwise, our accounting equation will not be in balance. All right, so that's transaction number 6. Transaction number 7 reads, on August 12th, sold services on account to Oakdale School. $350. All right, so when we sell something, sell is another word for sale. So when we sold services on account, we sold them to Oakdale Schools. So Oakdale Schools got increased. And also our owner's capital account got increased as well, because if you notice again, we are on opposite sides of the accounting equation. So whatever we do on one side of the accounting equation, we have to do on the other, otherwise our accounting equation will not be in balance. And notice here that both of these transactions say revenue. That's because they are revenue transactions. Alright, so now we'll be dealing with expense transactions. So an expense is a decrease in owner's equity resulting from the operation of a business. Alright, so transaction number 8 reads, on August 12th, paid cash for rent, $300. Okay, so we know that when we pay cash for something, that means that our cash account is going down or decreasing. So when we pay cash, we deduct cash from our account, and we also have to deduct cash from deduct our owner's equity capital account because we are on opposite sides of the accounting equation. So whatever we do on one side of the accounting equation, we have to do on the other. Otherwise, our accounting equation will not be in balance. Okay, so that's transaction number 8. And transaction number 9 reads, on August 12th, paid cash for telephone bill, $40. Okay, so again, when we pay cash for something, that means that our cash account is going down or being decreased. So when we pay cash, that means that cash is getting deducted. So we deduct $40 from our cash account. And we also deduct $40 from our owner's capital account because, again, if you notice, we are on opposite sides of the accounting equation. So whatever we do on one side, we have to do on the other. Otherwise, our accounting equation will be thrown off balance. And notice here it says expense. That's because these transactions are expense transactions. Okay. So finally, we will be dealing with other cash transactions. So withdrawals are assets taken out of a business for the owner's personal use. Okay, so transaction number 10 reads, on August 18th, received cash on account from Oakdale School, $200. All right, so when we receive cash, again, that means that our cash account is going up or increasing. So we add $200 here, and we received it from Oakdale Schools. From Oakdale School. So that means that when we receive cash from them, that means that their account is going down. So if you notice here, we have a plus and a minus. That's because we are on the same side of the accounting equation. So if we receive something and it's an asset, there will always be a plus and a minus sign on the same side of the accounting equation. And finally, transaction number 11 reads, on August 18th, paid cash to owner for personal use, $125. Okay, so when we pay cash, again, that means that our cash account is going down or decreasing. So we deduct $125 here. And we also deduct $125 from our owner's capital account because, again, if you notice, we are on opposite sides of the accounting equation. So whatever we do on one side, we have to do on the other. Otherwise, our accounting equation will not be in balance. And if you notice, it says withdrawal. That's because this is a withdrawal type of transaction. Okay. And this chart here shows us the transaction number, the kind of transaction, and the change in owner's equity. So transaction number 6, it says the revenue for cash. We added $295. Transaction number 7 was a revenue on account. We added $350. Transaction number 8 was an expense for rent, so we deducted $300. Transaction number 9 is an expense for telephone, and is an expense transaction for telephone, so we deducted $40. And transaction number 11 was a withdrawal transaction, so we deducted $125, and the net change in owner's equity is $180. Okay, so that is the end of the 1-3 text. In the next video, I will be going over the 1-3 work together. All right, thank you.